Today, we're talking about a big topic.
So back in November 2021, the skies were blue. Everybody was happy and making money. Everybody was driving Ferraris, talking about their NFTs, and life was great. Bitcoin was trading at $67,000. Fast forward, now the market's changed, and Bitcoin at some points in the past month or so has been below 20. We're in an economic downturn. Will it be a recession? Yes or no? The market is tanking, stocks are dropping, and so is Bitcoin.
To look at the drop that we've seen over the last quarter in Bitcoin in percentage terms. It's the biggest drop that we've seen in those terms since all the way back to Q3 in 2011.
So let's talk about what the Bitcoin crash means for you and your crypto investment.
Layoffs are a thing across the entire market, not just in crypto.
Is Bitcoin dead? What's going on with Bitcoin? Risky and frisky. They would have coined that. I'm frisky, not risky. This is not financial advice. Hey guys, welcome to another episode of Make It Make Sense. With me is my amazing producer, Olivia.
I always appreciate these compliments. I'm Olivia, I'm the producer of Make It Make Sense, and today we're talking about a big topic, I think, which is really important to crypto investors or people wanting to invest in crypto.
Have you invested in crypto, Olivia?
No, because I'm terrified of losing money. But that's just me. I'm a very anxious person. It would stress me out.
Okay.
So it's not something I've ever done, but it's something I want to do. So I'm interested to hear what you'll have to say.
Oh, the pressure. All right. Bitcoin's the focus here because that's one of the main crypto tokens. So we're talking in terms of that. But this can be applied to other investments in the crypto DeFi market. All right, guys. So before we dive in, make sure you subscribe to the channel. If you're on the YouTube channel, if you're on the blog, you can enter your email address, and every time we release new content, you'll be the first to access it, and you get to see my smiling face. Connect with us however you receive your social media news and updates. And without further ado, let's dive into what's going on with Bitcoin. So back in November 2021, the skies were blue. Everybody was happy and making money. Everybody was driving Ferraris, talking about their NFTs, and life was great. Bitcoin was trading at $67,000. Fast forward, now the market's changed, and Bitcoin at some points in the past month or so has been below 20. So Bitcoin's crashed a whole lot. A lot of people have lost money. So let's talk about what the Bitcoin crash means for you and your crypto investment.
To look at the drop that we've seen over the last quarter in Bitcoin in percentage terms. It's the biggest drop that we've seen in those terms since all the way back to Q3 in 2011. But if you look at it in terms of absolute numbers, Bitcoin fell from $45,000 at the end of March of this year to about $18,000. Back in 2011, the huge drop was from $15 down to $6. So I think that says a lot about how far we've come.
The funny thing about this, right, the key thing to take into consideration when taking a look at what's causing the Bitcoin drop is Bitcoin was supposed to be a hedge against inflation and not correlated with the stock market. Turns out that's not the case. Looks like it's more correlated with the stock market. And so since the Fed is hiking rates and stocks are dropping, there's also some fear around what's going on with the crypto market, and that's dropping also. So it actually turns out that Bitcoin is way more correlated with the stock market than was thought to, actually be the case.
It is very much in line with the macro sentiment. I mean, we keep paying attention also to what's happening with many of the fintech companies, many of the larger consumer companies as well. Layoffs are a thing across the entire market, not just in crypto. And the tension that we've been seeing from liquidity being withdrawn on all fronts is starting to take its toll. That said, we are also seeing the correlation between Bitcoin and the S&P 500 come down a lot. On a 60-day basis, it's down about 0.45, which is almost half where it was at the beginning of May. This highlights the crypto-specific nature of the slump that we've seen in our particular market.
In summary, what she's saying is the fact that we're in an economic downturn. Will it be a recession? Yes or no? There's no consensus on that, but it's clear that people are starting to get laid off. The market is tanking. As of right now, Bitcoin is definitely not a hedge against things like the Fed rate hikes or us going into a recession, because if it was, it would have proven itself. It seems like it's more along the same sentiment as stocks. Stocks are dropping, and so is Bitcoin. Should you give a shit about the crypto market crashing? The answer should be maybe, mainly because if you've invested less than 5% of your money into crypto, then you can wait until the market comes back and you can weather the storm. If you're trying to YOLO, if you went on Wall Street Bets and decided like, yo, I'm gonna throw in all my 401k money into Bitcoin because I want to buy a Lamborghini, you probably give a shit right now. My take on the basic market or the sentiment as around like these market crashes is that if you only have a little bit invested, it keeps you interested. It also allows you to see exactly like where the industry is going, because Bitcoin is, I would call it one of the components and one of the technologies that's enabling like Web3. You should be interested in it. You should care about it, because this is where the new wave of jobs is coming. It's almost like, to me, like the internet age or the web age that happened in the 2000s. Most companies and most technologies didn't make it out of it, but some did. And so those who are paying attention, those who can take a look at what's needed in this market, can actually come up. There is going to be opportunity in the market. So it's not only about Bitcoin. Think about the macro picture of like Web3 and where the industry is going, from DeFi, from decentralization, from the other cryptocurrencies, from the new use cases that haven't been created yet. So that's really why you should give a shit if you're following the rule where you aren't invested more than 5% in the crypto market. Just sit on it, wait till it comes back, and as the market rallies back, if the correlation stays accurate, then it looks like Bitcoin will move up with the stock market. All the advice and my opinions and sentiments are those specifically expressed by me. This is not financial advice.
New investors it can bring in, or new people who are going to want to leave Wall Street for crypto, as you did, as a number of the kind of superstars of the industry have. Is that going to continue with this crash in prices, or does it dissuade people from taking that leap?
That's a wonderful question, Matt. No, it does not dissuade people who are interested in the future of markets. We are seeing quality candidates. This does one thing. It does filter out those that actually do believe in the reforming potential of this industry and not just in it for the money. So it's good for the industry in terms of hiring on that respect. And the builders are going to continue to build. The Genesis, we're continuing to build. Many market participants, as you just saw earlier, are continuing to do so as well. Bear markets are much more interesting, a lot less fun than bull markets, but they're more interesting because that's when real work does get done.
Yes, it's a bear market. There's still investments that need to be made. Companies who are going to come out of the bear market and have market share do need to invest, do need to hire, do need to build infrastructure. The takeaway from that comment or this clip: how can I get ahead in my career? What are the skills that are required in order to be relevant in this new Web3 world? And how do I get those skills, and how do I get access to the education, the infrastructure, and actually get my hands on experience in the specific use cases that'll be relevant in raising your income level, your salary level, et cetera, et cetera. All right, so let's quickly dive into do's and don'ts. So I'm going to talk about do's from my perspective. Index funds, right? So I still have a lot of my money in index funds. I believe in the S&P 500. I believe in diversification. No, that won't make me a billionaire, but it's a safe way to get a steady return, which has typically been about 10% with the stock market. So put a lot of your money in the index funds and you can ride like that wave. You can do the research on yourself if you're a moderate investor and you're not looking to YOLO anything. Second is diversification. Make sure that you're diversified in your portfolio. Yes, the market is tanking, but make sure that you don't have all your money into one asset, like everything in Bitcoin or everything in like a handful of NFTs, right? Not necessarily smart, not the way to make sure that you specifically don't crash and burn, not only the market. Third point that I would make is that crypto is a volatile asset. If you're not an experienced trader, you know what the hell you're doing, you don't have a shit ton of money or a trust fund, then you should only be putting 5% of your money into crypto, period. 10% if you're feeling really risky or you're feeling really frisky. I think both of those mean the same thing. If you're risky and frisky, they would have coined that. A handful of friends who invested in Bitcoin years ago when it was low, when the market came back last time, right? They made like millions of dollars, right? They're Bitcoin like millionaires. So not saying that that's a strategy you should take, right? Everybody's financial situation is different depending on where you are on the spectrum of your temperament as it goes to investing. Let's talk about some of the don'ts. One of the don'ts is don't invest more than 10% of your whole portfolio, because if Bitcoin doesn't come back, or you know, it's kind of all over the place, right? Some people say it's correlated. There's different versions of correlation or different degrees of correlation. Short is, if you put in what you can't afford to lose, like, you're totally fine. Number two, don't bet your company or all of your company assets on cryptocurrency because it's not really proven yet, right? There isn't any like foundation. So anything that you're doing at this point is speculation. So let's talk about a few examples of that. One of them is MicroStrategy. MicroStrategy, the business intelligence software maker that borrowed money to invest in Bitcoin as an inflation hedge, is facing a growing threat of a margin call as the cryptocurrency value continues to fall. Shares of MicroStrategy plummeted more than 25% on Monday and fell 0.6% in pre-market trading Tuesday. The company owns more than 129,200 Bitcoin tokens and said that it would face a margin call, a demand from creditors for a bigger deposit to cover possible losses if the cryptocurrency slips below 21,000. So I don't know if if the margin call has happened as of today, but clearly Michael was betting his company instead of investing in other things like IT, business strategy, taking a look at the competitive market and how to beat out competitors. He's decided that he's going to speculate on Bitcoin and bet on it. And I guess we'll just see how it goes. He's way richer than I am. I personally wouldn't advise it. Olivia, would you take all your your whole business? Like, would you say, you know what? Instead of investing in my business, I might just invest in Bitcoin and see what happens?
Yeah, God, no. No, I would not do that. It just, even as someone that doesn't invest, it just doesn't seem like a good idea. Like, not at all.
It doesn't make any sense, but maybe because we're not as rich as Michael Saylor, we have no idea. But personally, I wouldn't advise it. All right, so let's look at El Salvador really quickly. Another big don't. El Salvador 425 million Bitcoin experiment isn't saving the country's finances. That's almost like a duh. I mean, you can't just hope and pray. You actually have to have a strategy, right? Key points. 9 months in, El Salvador's nationwide Bitcoin experiment is struggling. The government's Bitcoin investment has been cut in half. Bitcoin adoption nationwide isn't really taking off, and the country needs a lot of cash fast to meet its upcoming debt payments of more than $1 billion in the next year. I don't even think we need to read the article. I mean, I think that says it all. Crypto and Bitcoin are emerging technologies. They're still risky assets. Don't invest what you can't afford to lose, and don't bet your whole economy on it. And then the third point is don't leverage. Don't take out debt in order to leverage out what your investment is going to be in crypto assets, because most likely things like this happen, right? The market goes up and down. You can't really time it, and you shouldn't necessarily bet your future on it. At least I'm not going to bet my future on it. I'm going to be conservative with it. I'm probably more of the frisky type, right? I'm probably more of the 10% into I'm frisky, not risky. So I got 10% in, like I'm putting 10% into crypto. I'm dollar cost averaging in. I think the crypto market's gonna eventually boom. Once again, not financial advice. I'm just sharing with you personally, like what I'm personally doing. But you need to look at your own financial situation and see what works out for you. Is Bitcoin dead? No, but the market is crashing. However, there's still opportunities, not only in Bitcoin, but more importantly in Web3. Just only invest where you can afford to lose. Don't get overzealous. Don't speculate to the point of where you're putting your whole economy at risk. Based on how markets typically work, or how a lot of these investors got rich, is they had high conviction into certain investments and they went all in those investments. I don't have a high conviction rate in Bitcoin. I see it as something that's emerging, and that may be something where I can make money, invest, have a return in different forms and facets, but not necessarily to the point where I'm gonna go all in on it. If you like stuff like this, you can like and subscribe to the channel. You can follow us on all socials. If you're on the blog, make sure you put your email address in. And with that said, we will see you in another video. Peace out.